Hello traders, you are welcome back to the Forex Geek channel. In this video, we are going to be breaking down a tool that every trader should have on their chart, and that is the pivot point high-low indicator. I'm going to add the indicator to the chart right now. The pivot point high-low indicator. Okay, so if you are looking for a cleaner way to read market structure and spot key turning points, this indicator can seriously upgrade your trading game. All right, now let us just start with the basics. The pivot points high-low indicator automatically marks the most recent swing highs and swing lows on your chart. These points are key because they represent local extremes in price action, places where price either reversed or paused before continuing. Now, by connecting these dots, you get a clear sense of structure without having to manually draw anything. Why does this matter? Because trading is all about understanding structure. Knowing where the market is forming higher highs and higher lows, or lower highs and lower lows, gives you the context you need to decide if the trend is still valid or showing signs of exhaustion. Now, this indicator works across all time frames. On the lower time frames like the 5 minutes or the 15-minute charts, it helps scalpers catch quick momentum shifts. On higher time frames like the 4-hour or the daily chart, swing traders use it to define major market structure and potential reversal zones. So here's how to use it effectively. When a new high or low is marked, observe how price reacts around that level. Okay, if the market creates a new higher high followed by a higher low, that is confirmation of a bullish structure. For example, here you see this was a high, this was a low, right? This was a higher low, this was a higher high, it's another higher low. Now a higher high is in the process of being formed. It shows a clear bullish structure. You can use the most recent low as a reference for stop loss placement or as a pullback zone to enter with the trend. Now, if price breaks a previously established high or low and does not hold above or below it, that is a signal to start watching for a change in direction. So combine this information with a strong candlestick pattern like a rejection wick or engulfing bar, and you've got a clean setup. So this tool also pairs well with trend lines. When you connect the most recent swing highs or lows, all right, when you connect the most recent swing lows or swing highs, you can draw dynamic trend lines and watch for trend breaks in sync with pivot breaks. That's powerful combination, powerful confirmation. Now, one of the biggest advantages of this indicator is clarity. It removes the guesswork from identifying important levels, which is especially helpful if you are still learning how to read price action. You can see how this indicator does the heavy lifting for you. Not only does it just identify the swing high and swing low, it literally writes out the price point, the price, that exact price, for easy identification. So if you want to execute a trade, you can see the exact price for that swing high, the exact price for that swing low. All right. So this indicator helps you to keep your chart clean yet informative. The beauty of the pivot points high-low indicator is in its simplicity. It does not lag like many other indicators. It reacts only when a new high or low is confirmed, keeping you focused on relevant, actionable price zones. Now, when you want to use this indicator to trade, of course, you should also have clear, you know, checklist for entering a trade. For example, maybe a new low has been confirmed, make use of trend lines. So maybe you have price bouncing off a trend line or bouncing off a support or resistance zone, and then you look for a good entry opportunity. Probably, a swing low given by the indicator aligns with a support zone. That's a confirmation, right? You can see there's actually a support zone here. So this swing low now aligns with this support zone. So this would have been a good place to look for a buy opportunity. Just wait for a bullish candlestick pattern. Perfect. You can see that we had a bullish engulfing here. Can you see that a bullish engulfing pattern formed? So right after that bullish engulfing, you can enter a buy trade. If you enter a buy trade, your stop loss can be below that swing low, below the swing low. Then you take profit. You can just wait for when a swing high has been confirmed. You can wait for a swing high has been to be confirmed, and then you exit your buy trade. Or you can just use, nearest resistance zones, but ensure that you have a good risk to reward ratio. All right, minimum of 1:2. Okay. So to wrap it up, this is a must-have for anyone serious about improving entry precision and structure awareness. It's lightweight, easy to read, and extremely effective in real-time trading. All right, but ensure that you always observe good risk management practices. Don't trade with an amount you cannot afford to lose. Do not risk more than 1 to 2% of your account balance in a single trade, and ensure to always use good risk to reward ratios. So if you found this breakdown helpful, hit that like button and subscribe for more powerful strategy videos just like this. And if you want to see this indicator in action on a live chat, drop a comment below. I look forward to hearing from you. Thank you for watching and happy trading.